President Obama will go to the climate treaty talks in Copenhagen armed with a new tool to help curb global warming. The EPA announced today that greenhouse gas is a danger to the environment and that science, quote, overwhelmingly supports this finding. This announced at a news conference just a few minutes ago. EPA Administrator Lisa Jackson says that in light of the findings, the EPA is, quote, obligated to cut greenhouse gases. That means the U.S. government can start limiting carbon emissions even before Congress passes a climate bill. Jackson also said the agency plans to finish rules for car emissions next spring. Obama arrives in Copenhagen on December 18. Well, let's discuss how all of this is going to affect green energy companies. Pavel Molchanov covers those stocks for Raymond James. He joins us now from Charlotte, North Carolina. Pavel, thanks for joining us. So between Copenhagen and what we heard the EPA talk about today, what do you think the result is going to be for this industry?
Well, I think Copenhagen in particular is pretty much a dead letter at this point. Expectations are exceedingly low heading into the conference. And, quite frankly, we've seen President Obama, the UN Secretary General, many European leaders have all but acknowledged that there is not going to be any binding treaty coming out of Copenhagen. The most we can expect would be a non-binding agreement for some kind of treaty some point down the road. In other words, don't hold your breath. The EPA decision is a little more substantive because that potentially has the full force of government behind it. But of course, it's going to take quite a bit of time to formulate what the regulations will be. And then, of course, Congress at any point could decide to act on its own and potentially overrule the EPA on these issues as well.
So, Pavel, what could the next catalyst then be? Is it going to be potential cap-and-trade legislation, for example?
Well, I think cap-and-trade legislation certainly is pending in Congress right now. But the problem is that the Democrats simply lack the 60 votes in the Senate to push it through. I mean, similar to what the White House is seeing on health care reform. If anything, cap-and-trade is more controversial. You have an incredibly powerful industry and utility lobby pushing against it. Refiners and many other energy companies are dead set against cap-and-trade. And I simply do not think the Democrats have 60 votes in the current Congress. And then, of course, we'll have to see what the 2010 elections bring.
Well, so when you look at these alternative energy stocks, and let's take solar first of all, what really is going to be, or is there anything that's going to push these stocks higher? They have recovered somewhat from the lows, but not as much as the broader market.
Well, the good news for example, solar, as you mentioned, is that they don't need cap-and-trade to become steadily more economically competitive with traditional electricity. So, for example, the cost of a solar module today is less than 50% of what it was 2 years ago. What, of course, that translates to is cheaper price of solar electricity and ultimately better economics. And this is completely without cap-and-trade. Subsidies from Washington and other governments help. But again, this industry is moving towards what we call grid parity or cost equivalence at a pretty rapid rate. Cap-and-trade would accelerate that process, of course, but it's by no means a prerequisite.
So you say that it's becoming more cost effective, but of course the gap with more traditional energy sources is still pretty broad.
Right. There's still a gap. That's absolutely true. So grid parity is that point at which the two become cost equivalent. And I think for solar power in the United States, grid parity by 2012, in other words, in less than 3 years, is achievable. And I would point out that the U.S. is pretty cheap electricity. So in a country like Japan or a country like Italy with very expensive electricity prices, grid parity could easily happen in the next 12 to 24 months.
So when you talk about grid parity, there are also various companies that are more focused on so-called smart grids or more energy efficiency. Talk to us about one of your picks there.
Yeah, so one company I like in the smart grid space is called Enernoc. ENOC is the ticker. It's about 700 million market cap business. And these guys do what's called demand response, which is to say they help bring together utilities and commercial and industrial power users. And what they do is help those companies reduce their power consumption at times of peak demand. It helps the companies save money on their power bills. And, in fact, it helps the utility stabilize the grid and prevent those blackouts that are very frustrating for a lot of folks.
Pavel, just real quickly here in about 20 seconds, we just looked at that stock chart. That's one stock that has done very well, up over 250%. Why is it still a good buy?
I think this company has beaten both our and the street's earnings estimates for the past 4 consecutive quarters, and I think they'll continue to beat expectations heading into 2010.
All right, Pavel Molchanov, thanks so much joining us from Charlotte, North Carolina with Raymond James.